Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, the 17th of November. I'm starting off with Gulf Keystone, where we've got a configuration here on the daily chart, which is possibly more bullish than we've had for several months. The real action here, as far as the positive scenarios are concerned, here comes from the way that we've seen decent consolidation above the 50-day moving average, currently at 64 pence, and the double RSI bounce above the 50 level, which is normally a decent momentum signal. The view at the moment is that at least while there's no end of day close back below the 10-day moving average at 72 pence, we should see further upside, further recovery, despite this resistance line from March taking us through to the 200-day moving average at 92 pence as what is seen as a minimum target. Could actually stretch a bit higher given the 100 pence psychological level, but at least above, well above 72, further attempts to break back towards the 200-day line. Next up is an old favorite, albeit one with a changed name, that's LGO Energy. Here we can see that much higher support here towards 4 pence at the floor of this rising trend channel from May versus October, where we had a bounce off the 3 pence level. Also, we're rebounding much higher than the 200-day moving average of 2.7 pence as well. The view now is that as little as an end of day close back above the 50-day moving average at 4.72 pence should be enough to give us a partial or even a full retest of the best levels of the year towards 7 pence over the next 4 to 6 weeks. If you're cautious on the stock, maybe you'd also wait for a break for the RSI back above the neutral 50 level, even though there's been a double bounce here, which is quite encouraging. Looking ahead to another stock which is similar a configuration on a charting basis to that of LGO, and that's Rose Petroleum. Here we see a bear trap rebound from below the October floor at 2.57 pence. That is quite significant on an end of week close basis, and it's also significant that we managed to rebound with several support points, in fact, well above the 200-day moving average at 2.15 pence. The view at the moment, therefore, is that while there's no end of day close back below the March support line at 2.45 pence, we should see a new leg to the upside, possibly as high as 4 pence over the next 4 to 6 weeks, given this latest bear trap and the way that it's a bear trap also below August support. We're cautious on the shares, maybe you wait for an end of day close back above the 20-day moving average of 2.91 pence, but it looks as though there's been enough work done here to deliver a new leg to the upside. Finishing off with the Westminster Group, where we've had to hold our breath over the recent past, given the quite painful breakdown for the shares. But November has seen a double bottom with the 25.5 pence October floor and a likely rebound off this May descending price channel floor as well at the same level. There's also reasonable bullish divergence from this RSI support line, especially for November. Previously, I said that if there was an end of day close back above the 20-day moving average, that would be a decent buy signal for cautious traders, even though we've already had a double bottom, which gave an aggressive buy opportunity below 30 pence. The view now is that the minimum here on the upside should be towards the 50-day moving average at 37 pence, especially as you can see how that has been tested as resistance since the beginning of September. Best case at the moment, breaking through the 50-day line and heading towards 48 to 50 pence, which is the top of this 2014 price channel. That's it from me. More updates at spreadbetmagazine.com.